Hey everybody, good morning. See, we got channel members Ivan, Rob, Jerry, Craig, Will, Dawn, Diane, Sergio, Gary, Aki, Jason, Svinborn, General Rush, good to see you, sir. Nancy, Scott, Cliff, Logan, Mark, Ted, Dan, B. Good to see everybody. Pauline, good to see you, good to see you. Put call ratio right here. And, it did jump up a little bit yesterday off the lows after the close, but let me grab this other chart with the standard deviations drawn on it. Throw this up here, pull it over, and check this one out right here. So this has got two standard deviation lines drawn on it, and there's where we were right down here. This is a 5-day moving average right here. 5-day moving average. So this is just the raw data. We go up to like a weekly, which is kind of more like what we got. Check that out. That dip right there. Look at that. It's a very extreme kind of move. It doesn't perfectly line up with this chart, but so there's if we look at the current percentile since 2010, that's like the last 15 years, we're 2 standard deviations out from the average. Right there. Average is 0.94 since 2006. That's the dashed line up the middle. The blue is the 5-day moving average, which is different than what we have on this chart. This chart is the raw data, PC. If you want to pull that up on your trading view, PC. When these things get extreme, we tend to have extreme moves, right? When things are pushed to extremes, we tend to see extreme reactions in the market. This got pushed to an extreme move, and then we had an extreme move back the other way. Epically low, right to the weekly roadmap line, funny enough. And now we're back up, trying to push higher. Trying. I expect we see a retrace. Does it have to happen? Absolutely not. Do we have a little bit room left on the upside? Yeah, just a smidge. Just a smidge. We actually did grab my alert that I had just under that 1272 yesterday. We did pop it off somewhere in here. Yeah, right there at 115. Or about 113, I guess. I had it about 10 points under that line. We grabbed it. So we're ripe, right in the vicinity where we can top out and run it down. Now, if you're all in bullish, this is a cautionary flag. All right. If you're sitting on the sidelines, time is coming. All right. We have the S5TW. Stock's above their 20-day, pushing back up almost to 90. This might spike. We might get another bullish day today and spike above 90 and mark a top of sorts. All right, this was, sometimes we see that further push out. Sometimes we do, sometimes we don't. You never know exactly. Right over here, we got a pop and then a little churn and then a bigger pop right there. Over here, pop, pop, and then lower highs and then drift off. Can it grind up here for a little while? Possible. Possible. When you look at the S5FI, stock's above their 50-day. We came up off that low pretty darn fast. We're about to breach 80. If we were to spike it up to 90 today, that would be a big indication that we're approaching a top. All right, these are cautionary. Like, we're approaching a top. The market can stay irrational. It can stay overbought. It can stay, stay doing crazy things. We can grind higher. We can make a new all-time high. It can keep being crazy. Keep all these numbers are just numbers. All right. They don't mean anything except it's time to be cautious because conditions are ripe based on, past performance, not necessarily indicative of future results, but based on the history of the market, this time's not usually different. When these conditions set up, we usually get some sort of large pullback reaction. Is it today? I don't know. Is it tomorrow? I don't know. Is it next week? I don't know. When is it going to happen? I don't know. That's the unknown. When? What's likely to happen? Right back to the bottom. What's likely to happen? Right back to the bottom. This one, hanging out in the middle, easily, this is stocks above the 200 day. We can easily do a dip on the longer time frame. It's likely to go on up back to the top. So this correction will probably be a correction. Probably take us, it could be fast, could be slow, could last the rest of the summer. Lots of could be, what's possible, and just about anything's possible. I wouldn't be doing my job if I don't warn you about the potential bads, all right? Don't get caught up in the potential pullback is the only possible outcome. I know at least one of you talked to me yesterday and said that you were concerned and you're kind of caught up in what I've said about the potential for a pullback. But we could keep grinding this baby right on up back to the highs. We can keep doing that. Let's fly back and look at something. Right here. This is 2007. Right here. Big, strong, crazy dip. That was the 3-day roadmap line. We just hit the weekly roadmap line a month ago or so. Then this rip coming off of here. Not really a pullback. We didn't get a 618 reaction. Right up to all-time high. Then what happened? Like that. Back to the 3-day. Took a couple months. Then what happened? So I'm very concerned right now. This pattern is showing up on a bigger time frame. This is the same pattern right there. I'll grab it. We'll go back to the current. Flip up to the weekly chart. I just want to show y'all what I mean when it's very similar. Let me grab that screenshot I just threw out. I got to size it down so it'll fit on the screen. Come on, come on. Come on. Size. There we go. Don't make it big. Now the size is all off again. Cool. That's the smallest it wants to go. Cool. Love it. Look at this. See this little price pattern right here? Boy, we dipped. Right there. Look at this right there. Where we dipped. Right there. You see that kind of tail we had in there? That long tail that went through the roadmap line? This is why I'm concerned, all right? Came ripping right back up. We even had a little pullback in there. I'll undo this. So we had that little pullback, that red candle in there. We had a red candle in there on the weekly. We got a red candle in here in the weekly. And then we go ripping out to a new all-time high. That could be the end of the bull market for a while. This one lasted like 7 years. This one's a bigger time frame. All right, if we were 7 years on a 3-day, it could be like 14 years. It could be 20 years on a weekly chart. This is why I'm concerned, all right? This is the conditions are setting up very similarly to something I've experienced before. When it happens, I don't know. I want to see this pull back right now before we go higher, because that sets us up for the potential to get an extension higher. If we just go ripping off right now to a new all-time high, that's like kind of the worst case scenario. We're going to start, we have the high probability to start a big long-term correction right there. All right. That's kind of why I'm focused on. I want this pullback. I want it. Like, I want it to happen. I'm not all in on it. I have a little bit of exposure waiting on it. But it's possible. We just shoot up here. And then that's the last hurrah. That's the last high we make. Eerily similar. All right. Different time frames. Everybody with me? Any questions? Remember, coming up at 5 p.m., I have my 30 Minutes of Awesome show where you can bring your ticker and I will get after it for at least 30 minutes, trying to answer all your questions. I mean, do some chart analysis. Not many people usually ask questions, but I'll take questions. I mean, yeah, so bring your ticker. We'll try to hit it. And coming up at 1 p.m. today, I've been talking about the leverage ticker stuff. We have that leverage ticker thing coming up at 1 p.m. If you want to come join that, if you haven't seen an email yet or anything from my team, here's the registration link right here. Come join us right there. Call them supercharged tickers, supercharged alerts. They're basically a way to use leveraged ETFs, just buying shares and get option-like gains without having to play options or worry about strike prices, worry about option expiration dates. How much time do I need? You don't have to worry about time decay. You don't have to worry about really any of that stuff. And if you're interested about learning more about it, getting some of my alerts, there's the link in the chat. All right. Moving on. All trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. Just because I talk about them doesn't mean that they'll work. So if you desire personal financial advice, I'm not telling you what to trade. Lots of people want that, but I'm not telling you what to trade. So be careful out there. We look at this put call ratio going all the way back here. All the way back. You can see it was epically chaotic back here. Epically chaotic. When I talk about we could see volatility expand, that's what I'm talking about. These giant swings. Like, we haven't done that in a few years. It's going to be almost 20 years ago. We had some big swings here as we came up out of it. It took us, like I said, it took about 7 years to calm down out of that correction. We've been rocking along. COVID in here didn't even cause a big crazy thing in the put call ratio. Say, well, I think the way that options have evolved and the dailies and 0 days and all that stuff has kind of chilled this out. It's possible. Options trading is way more popular now than it was back then. Way more popular. Well, we actually have ETFs that trade options now. That didn't really exist back here. That's ETFs are exchange traded funds. So it's an interesting metric of the market. And you see, it was a lot blurrier back here, and now it's kind of refining itself a little bit. So does this that happened back here mean anything for now? I don't know. Like one of the comments says, though, history doesn't repeat, but it does rhyme. So it's my call to be careful out there, everybody. Be careful out there. ES, checking out the lower time frames, see where we're at. As I warned yesterday, if we stay below the 15-minute, we would continue down, but then we promptly came blasting back up, made a new all-time high, and now we're back to the vicinity of the 15-minute. If we break below it, that's potential to go on down. One of these is going to be the final little squiggle. Is it now? Is it an all-time high? I have no crystal ball. I have a bag of unicorn dust that sits on my desk. It's organic, it's cheap, doesn't do much good for firm predictions of the market. All right. 30-minute, we bounced right off. Like I said, that was the one to watch yesterday. If we held it, probably going higher. That's exactly what we did. So there's one to watch right there. Put your alert down here. If we get down through it, potential to go on lower. The 1 hour is above that. We haven't been down there in, gosh, almost 2 weeks. Haven't even been to the 1 hour in 2 weeks. So time, maybe. 4 hour, it's been almost 3 weeks. All right, these things don't go forever before we go visit them again. The longer we go, the more violent the correction is going to be. See over here, big violent pull away and then big violent snap back up. But it still took from April 2nd till April 23rd. That took 3 weeks. This visit happened pretty quick over here. That was on the downside. Go look over here on the upside. Here was a touch. November 20th. Big, crazy big move up and then violent retrace right there. Almost a month later. That action looks a lot like what we got going on right now. So we could see a pop and then a violent retrace. These patterns just happen over and over. They're, the market is somewhat cyclical in nature. We do the same sort of things over and over. There's not really new things that happen. All right. It's the price patterns that move the market, not news. You can think it's news. The mainstream media sure does a great job, and our human brains loves latching on to the stories. The stories mean jack squat. I mean, that big downgrade story yesterday, oh, you'd think the sky was falling, and then right back to highs, right? So there you go. There you go. And this downtrend started way before, everybody's like, oh, it's, tariffs in China and blah, blah, blah. That was the high on NASDAQ back in December 17th. We started down December 17th. Trump wasn't even president. There was no talk of tariffs. That's when we started the correction. It wound up down here. That was an A, a B, and a C right there. As they say, don't confuse the forest for the trees. Don't confuse mainstream media narratives for the reality on the chart. That's a first move down. Could be a 5-wave down. In which case, if that's an A wave down, the B wave could make a high. Even up here, we could go back up here. That'd still be the A wave down. This be the B wave right there. and which means the C wave is going to be massive and vicious and extreme. If you thought this was a crash over here, let's wait till we do this. Wait till we do that. Might I remind you what we just talked about. Right back over here. This was actually the A wave. This was the B wave. That was the C wave. This was one big correction. I was talking about just this top, but this was one big correction right here. Started with the dot-com bust, continued on with the great financial crisis. It was all one big correction. Might blow your mind, but that's the reality of it right there. Very proportional. We bottomed at a lower low. These patterns repeat themselves. Now we're on a bigger picture, bigger time frame, bigger potential move. Right there. We could just be on the first piece down. And then we go on to make a rally higher, and then we do the bigger move down. So be careful. This could be we could be entering a period in the market where we haven't really been here in a long time. We'll have periods of down, we'll have periods of up. Be interesting. Should be interesting. That's I love talking about this stuff, so I'll still be here. I don't plan on going anywhere. So NASDAQ right here, we do have a cooking downtrend of highs right now. So if we come up and hit that, that could signal the next drift lower here. If we make the higher low, could set us up to go higher. Russell into the danger zone here. Just scraping the bottom, sitting right below the roadmap line. This one can pull back and then maybe pop through, get a little spicy to the upside, come back, retest this consolidation zone, and then lead us down bigger. This one's not making all-time highs. Not even close right now. So this one may be more accurate to watch. I do have a put spread on this one out to September timeframe, looking for this next move down. Maybe it goes this low, maybe it doesn't. I have something a little closer to, I'm more in this range with my put spread. CL. Can't get any kind of trend going. We did do the 618 retrace, and we popped up yesterday. Looked like we were going to break through a little baby 618. When I say a little baby, we zoom on up. Look at this right here. We've got this high. We've got this low. We tapped in here. 1, 2, 3. And this one happened overnight. Tapped in there. It looks like this is set to pop on back higher. USO on the daily chart. Looks like we might rally back up into the roadmap line there. Now for leverage tickers, UCO looks like we could see about a 10% upside maybe. GC, still working on it. Still working on it. Still working on it. So rally back up to this 33.50 area. That's what I expect. We already did. You know, we're basically working on this right here. We did this dip right down there. We did the initial pop. We already did that. Check. Already did the retrace. Check. We've done that. Did that. Now we're potentially working on the climb up here, which would be this. right here. Could come up short. We could only make it to 3320, 3300. All possible. Then we'll probably do the bigger down. I've been pretty right on the money on GC so far, which is gold. You wonder about GLD. We're looking for a little pop back up in this 307 area. And then we'll probably start a bigger down somewhere in this 270, 280 level area zone right there. Somewhere in there is where I ultimately expect it to go. So we're expecting pop up to here and then a bigger down over here. Cool, moving my alerts. Love that. Love that, love that, love that. Can't move them when I try, but I can move them when I'm not trying. Bitcoin keeps grinding. Yesterday was talk about some interesting price action yesterday. We had that big red candle, looked like doom and gloom right there. And then we shot up and closed right there. And then I would be careful. If we get lower, if we close, and here's the warning. Here's what to watch. Put your line right across those tails. If we close the day, close a day, not necessarily 2 day, below that line, probably coming right down here to about 92,000. That's what that price action tell me. Now, on the flip side, we did that same sort of sideways consolidation junk right here. Like that looks like that right there, kind of just faster. Couple days down, couple days down. We could go on another rip and set a new level up here. Entirely possible. We go on a new rip, take it right up to new all-time high, and consolidate around 115. We don't have to do this. But if I just talk about the upside, then we do a big down like this. People lose money. Everybody gets angry at me. Pitchforks come out. I've learned this over the last 4 years of doing this guru stuff. People would rather me warn about the downside, and then we nail it on the upside, than me just talk about the upside, and then we get screwed on the downside, and everybody loses money. It's just the way it is. Not trying to be doom and gloom, just warning about the potential downside that can happen. All right. And hopefully that's why you're here. Hopefully that's why you watch me. Give me a like and thumbs up if that helps. Make sure you subscribe. Come back for more. I'll keep doing this. Like this is I love doing this stuff. Love talking about markets. I love talking about price action. This grinding on this roadmap line. We might see a bigger retrace back down in this 18 to 2,000 area. If Bitcoin pulls back, this will probably go with it right down here and then potentially build support to go higher. NKD, grinding. We're in this little danger zone right here. We took it back up yesterday, but we're still right below the box and right above the roadmap line. We're in a very narrow zone. If we get below that, probably coming right down here, as I've talked about for, a couple weeks now. Feels like a month. Dollar. Yeah, see, that's Rod. Correlations when they're correlated, not when they're not. Nothing like that's so. All right, let's just go SPX. Let's jump over to our clean chart. SPX. And we'll compare GC. So where's the inverse correlation to gold? Maybe we're inversely correlated right now. When did it start? Looks like they ride together most of the time. They're kind of on the big time frame here. Looks like they're pretty ride or die together. We get periods of but then kind of drift back. We get an inverse period, and then they go back into sync. So there's periods of time where and then you look at that, gold's way outperforming. It's up 1,000% since the dot-com bust. S&P's only up 300%. The pink is gold. Come back to financial crisis. Gold's underperforming. S&P's outperforming. Depends on where you want to line them up. Want to line them up in the 2022 bottom? They've been pretty lockstep right up through the high right there in February, and we decoupled a little bit. One thing's for sure, based on the history and looking at short-term moves, these two will probably cross again at some point. Do they have to move inverse? No. Can they move the same? Yeah, they've been doing that a lot since the bottom. Right there. You throw in another measure. Yeah, well, it's all because of the dollar. Right? Dollar's been kind of flat, but gold's been ripping. It's kind of interesting. So before you spout off somebody's correlation, maybe one you heard on MSNBC or Kramer or whatever, just pull up the charts and look at it. Like, does that hold the mustard? Does it pass the mustard test? Moving on. Looking at the Mag 7 stuff, opportunity, Apple. Can the market go to all-time highs without Apple? We've seen that not be true in the past, but right now, market seems to be doing just fine without Apple. We're seeing S&P climb higher without Apple. It's kind of crazy, right? Look at that. Apple's dropped down. Nvidia is number 2. Microsoft, Nvidia, Apple might drop out of the $3 trillion club. These two rocking and rolling. You know, where does Nvidia get the money? Maybe it comes out of Apple. Maybe Apple's cooked for now. Maybe Apple's sauced. Applesauce. Anyway. Jumping on down. So right now we're just stuck in this, under this resistance. Big resistance roadmap line in the 618. Now, one thing I've noted in the past, when the roadmap line gets barely indistinguishable, its ability to be resistance seems to be somewhat diminished. We can see that like right there when it got really thin, we just went through it. Sliced through it, gap through it like butter. When it's nice and thick and fat, we see it be support really well. Same, we see it be resistance really well when it's nice, thick, and fat. So be careful. We could slice through, or we could keep going down. Unclear, right? Thanks. Amazon at a resistance point. If we get a market pullback, this one can go right down here, around 140. And Apple could be heading on down to 140. Google looks like we may have already bottomed out. Has that potential. We're grinding on that roadmap line. Next resistance all the way up here at 180. If we get up there, I'm going to be more cautious on Google for a pullback. Meta, grinding on through. We're stuck at the up, we're stuck in this danger zone between the 50 and 76 right here. Stuck right in the middle. If the market gets a pullback, this one will probably not be immune. Could go lower low, back down in the 400s. If we can maintain the upward momentum, probably take it on up 783, maybe even all the way up to 1,000. Microsoft pushing on out. Target is up here at 486. Nvidia just grinding right here. If we can take that higher, target will be 161. Watch out for the pullback. That's been one heck of a move up off the lows and needs some sort of pullback. Tesla here has potential. I mean, we're stalling out right there. Stalling out right there. I want to see this climb on even higher. Get on up through the 380 zone. It's possible we come back down to the roadmap line, especially if we get a pullback in the markets before we can build that higher move. Do have a large catalyst coming up in June. Potential new paradigm shift for the company. Be careful. Now I go pull all the gainers in the pre-market. That's things moving $2 or more up in the pre-market. Put them on the gainers list. I don't really sort through them before I come on the show. Down $2 or more and I put them on the decliners list, which is right down here. And we just kind of sort through them and look for opportunities. Now I also brought my setups. They're my classic market roadmap pattern. I've got 7 of those that I'll show off later on. So searching through here right now, QBTX, that's 2x leverage on QBTS. So always go to the underlying QBTS, quantum wave. Wow, that looks dangerous. I wouldn't touch it with your money. Not going to touch it with my money. Be careful playing with this. Be careful with playing with this. Quantum may be all the hype, all the rage. The reality of it, we don't have a single quantum algorithm that we've proved out that can do anything. Every quantum algorithm we've come up with so far basically has a traditional algorithm that performs almost just as well. That's the reality of quantum computing right now. There is nothing that it can actually do for us that we figured out. They'd be like, well, we got to build it before we can figure it out. Great. But what if the answer is there's no actual use? So be careful chasing that one down. Definitely be careful. Home Depot coming back up strongly into this danger zone. It was up nice. Now we're giving back up some gains. Coming up into that danger zone. If we can get up through, we're looking at 455 on the upside. We're coming into home improvement season. We may see this cruise on through. Yeah, historically, we kind of have dipped into that May-June timeframe and then ripped. Coming into July, so we bottomed out in May. Nice rally into August. It's just a seasonality thing for Home Depot. Bottom out May, June, rally into August. It's a pattern we typically see. Bottom out June, that rally took us on into December. So historically, we typically see strength after we bottom in May, June. which maybe we bought them in March, early, April this year. Then we see a rally through July, August in home improvement season. PEGA. That one. Nice move so far. Here's the high. Here's the low. Moved above. 121 upside right there. UNH potentially made the bottom, but also has... I have my support down here, right in this zone. Right down here. Maybe where we need to go visit. We did hit this target. We blasted right through that target. Crazy. I got short right here with puts. I booked them out right here. And then we went and hit the target. Absolute nuts. This little rally might lead to one more dip in here. It's very difficult with the big gap to build wave structure out of this, but it's potential. Well, we got a little bit more downside to go. And this could chop around here for a while before we do the final dip right there. PTIR is just PLTR's chart. We're in a consolidation right below the 134 target. Be careful here, especially if you're on the leverage ticker. The downside here, 34% back to the roadmap line. That represents like a 70% potential downside on PTIR, the leverage with 2x leverage. Could have a 70% downside here. %, takes us back down, all the way down here, back to the lows. Limited upside. You're like, well, what kind of upside might we have? Well, my expectation is only for a minimal upside. Potentially only like 10%, maybe 20%, maybe 11%. Could go up 20% right there if we go to the 1272. So we'll go back to PTIR. 2x leverage. If we get the 10% upside, that's 20% upside. So you're only looking at a moved up to 316. If we got the 20% upside to the 1272 on LTR, we look at a 40% potential here, which would only be up to about 370. That's $100 up. But compare that to potentially losing 70%. That's a little risk to a lot of, that's a big risk to a little reward right there. Get the words right. Big risk, relatively small upside reward. Consider if your risk reward is in the right place. Cigna, still working on trying to make a bottom. Another healthcare stock. This one looks notably different than UNH or Humana. Notably different for Cigna. Seems to be in a different place. TIL. Well, we pulled it back. Look at that. When we popped, I was like, well, we'll bring that back. We brought it back. Still under the roadmap line. Still potential to grind it back down. This has a reverse split in here. So this does meet all the qualifications of a dumpster fire. Remember, dumpster fires can go back toward the bottom. This was never $400 a share. This reverse split is the multiplier that makes it that high. Take these prices, divide by 20. So it was $20 a share when it was up here. That reverse split made it so those numbers divided by, multiplied by 20. So RGTX, leverage stuff, man, it's showing up like crazy. NRXS, crazy pop, low price stuff. Be careful. Looks like another dangerous stock. AS. I I chase reliable patterns. I don't chase the meme stocks. So if you're here for the meme stocks, sorry, it's not my bag, baby. This one popped right up and hit the target. Be careful. Majority of the time we see that come back down. Core weave. This one's just been crazy. Don't have enough chart to predict anything. It's kind of new stocks, you know. Another IONQ grinding up into the resistance. If we can get above that resistance, it's potential to come on up into this area where I've got the target 60-50. That pretty healthy potential upside right there. It's a potential 75% upside. So that's 150% upside potential on IONX. Roughly 100, round down 100% potential upside. Now, what would be the downside? If this broke and went down, we could be looking at a downside, potentially 96% downside. Ooh. Actually, 60% downside. If we went lower low to the next extension, that's 120% downside on 2x leverage. That would be, I don't know about you, but more than 100% loss means the stock goes to zero, which means it'll probably reverse split to stay listed. Coin. So it's a large risk on IONX. Coin pushing up through. This has nice upside potential to go up to those targets. 396, 440. There's the potential upside, 50%. Leverage ticker, 100% upside. Here's the kicker. 100% upside right here doesn't take that to a new high. Only takes it right back up here. The decay on the downside is eating this one. Now the potential upside, coin breaking out to new highs. This one, not. Coming up way shy of these targets. It's gonna have to, coin's really gonna have to outperform to push this one up to new highs right up here, like 110. Boil is a leveraged natural gas ticker and is getting boiled off. Probably gonna go lower low. This thing does reverse split. It does have decay. Keep maintaining the short on natural gas is difficult. Maintaining a long on natural gas. This is a long on natural gas. Maintaining the long on natural gas is difficult. Maintaining the short on natural gas is difficult because natural gas doesn't actually trend. When you look at the long, big picture, we just kind of churn in a range. Same thing that VIX does. The same thing the dollar does. So when you see leverage tickers trying to take advantage of something that doesn't trend, just stays sideways. See a lot of decay in those leverage tickers. That's why when you move to UNG or boil or cold, they all seem to decay and have reverse splits. It's hard to maintain the leverage on something that doesn't move. So we also see that in VIX, just churns sideways. And then we see stuff like VXX, decay, UVXY, decay, SVXY, actually do a little better, but in its long-term history, just kind of go sideways. Look at the lows, potential to have bottomed out. Need to see this break back through the roadmap line and get back up through. Right there. Dun, dun, dun. For those of you loyal viewers that are still with me here, tomorrow I'm going to have to wrap it up at 10 o'clock. I have another show I'm going to have to go be on at 10 o'clock. So I'll invite you all to come over to the other show and we can keep the conversation going. There's QBTS we already talked about. That's a dangerous pattern. I don't like it. XYF Financial looks like a freaking dumpster fire with the reverse split back here. Be careful chasing that one. SYTA, garbage. NVO, caution. Did y'all see the story this morning of Klarna? Klarna picking up. It's a buy now, pay later, similar to some other stuff that's out there. They're seeing they're booking $99 million of loss in the first quarter because people just decide not to pay the bills. We're seeing that low end customer struggle more and more. People, they see 41% of their customers are using buy now, pay later on groceries. Think about that for a minute. That's something we all got to buy. It's an important necessity. Yet people are using buy now, pay later on groceries. I mean, that's just a recipe for disaster. It's kind of like they've taken the concept of checking a cash, cash loan, check cash loan places, and then built a buy now, pay later that's more accessible for everybody. And it's like a trap. It's like a consumer trap, as far as I'm concerned. RMD, ResMed, this thing's been beaten down since the GLP-1 drugs started getting popular. And it's entered into a period of sideways consolidation, lower high. This might need a third wave down. Now, if we can break through, we could see some upside back to 270, 280. If we find resistance there, we may go cruising down here to 100s. MDB, still hunting a bottom. I think this looks best with further downside. FedEx, potentially turning a bottom here. We're going to have to break through the roadmap line. Big picture, this does look kind of nice, but it has the opportunity to come on down since that was a lower high. It's like, which one is it? Is this set up for a measured bounce, or is it going to break through and come down here lower? Not 100% sure. Has potential, big upside potential to 500 if we can get the upside right here. But it has a big risk if we break down back below this danger zone here. Dun, 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 dun. TCOM, potential to pop on up. 81 on the upside. Reported earnings didn't work out the greatest. Back to the roadmap line. VIK, back to the roadmap line. XXRP, 2x leverage on XRP. If crypto doesn't go, the leverage is probably gonna eat that one up. RHP, bouncing off the bottom of the roadmap line. Watch for a retrace. That would be down to here. Be where I expect. PTIX, reverse split, dumpster fire. Onto, keeps grinding lower. Be careful. Setups for today: ERJ, Embrar. Yeah, beautiful. That's a really nice looking setup right there. 59 on the upside. Doesn't have the strongest history, but it's also not statistically significant at this point. IDA, another pretty strong looking candidate here. I just like the price action. It's not necessarily that the ticker is going to work out. That would be 122 upside. KMB. Got the high, we got the low. Fire and above. 153 on the upside. KNSL. That one's just working in a watermelon seed squeeze. I'm not sure I would take that. LNT. Not LMT, but LN, November T, Tango. Lima, November, Tango. Pop right there, 67.96. That one, not bad, but doesn't really make, like, the losses eat up the gains. Bring it back to only 4 cents on the dollar gain in the long term. Another pharmaceutical. These are not my favorite to play. They tend to fail more often than they work. But 15 on the upside. And last but not least, WC. There's the high, there's the low, there's the entry, and 112 on the upside right there. This one, smoking hot. That's check. That's 90% check plus. That's 4.6 check plus. I might add one of these or two of these into my 50K challenge account, looking for that 112 on the upside. Nice little potential right there. I have to do a little tighter. See what the upside is. 4%. Nice potential. Nice potential. All right. Have a great day, everybody. We'll see you again later. Bias for the day right now, just more caution. S&P grinding here. If we break down, watch for roadmap line. If we get below that, watch there. I've already told you, watch the 30-minute roadmap line. That's the one. That's the important one right now. If we get below it, switch to the hourly. Get below that, switch to the 4-hour. Get below that, switch to the daily. If we get below that, we're coming down here for the next support zone right there. So there you go. Have a good day. Remember, 30 Minutes Awesome coming up 5 p.m. Eastern. And at 1 o'clock, I'll have the debut of the new system. Have a good day, everybody. See you again later.